Good morning, everybody. Happy Tuesday. Welcome back to the Daily Profit Plan. All right, it's going to be another interesting day. For the first time in a long time, here is our daily profit play from yesterday. First time in a long time, S&P closed below the 50-day moving average. So now the question is it going down? Is it going to hit the 100-period moving average? Is it coming after that October 10th candle? We'll take a look at that all this morning. Make sure on my ATR tracker for daily profit play, we had a nice full winner yesterday. Posted the results. Yes. Okay, good. All right. So the 18th opening price, we're looking at a gap lower. Futures down about 0.43%. Here was our daily profit play from yesterday. We started out with like a nice, 30 to 40 point rip in the morning. So 10 to 53 went up 43 points. Ended up finishing way lower for the day. Came back to test Friday's low. Didn't quite take it out. Still finished by the way, still finished inside the market maker move. So we opened here. I posted this in Telegram yesterday. We opened and closed within 35 points. Market makers had a plus minus 40, 45, 46 when we looked at prices yesterday at the open. So good on them for a Monday to keep things intact despite, obviously having a lot of intraday movement. So VIX is up today. I saw VIX in like the 23s. 23.69 up about 6%. So we will take that in consideration. Let's recenter this thing 66.72. We're going to get a gap today as well. 66.72. Recenter. We'll do our math. Our VIX is 23.69. Let me get a couple more workspaces up. Let's go cleaner and fresher. This is the. Let me check JPM Goldman Sachs. Whoops. Down slightly. JPM down about $6. Okay, HYG. Let's see if we got some credit spread widening a little bit. Not really. Not yet. JNK, LQD. These things are still pretty tight. Looking to see if credit spreads are blowing up a little bit. All right. SPX. So first time in a long time. Here was that run where, we were conscious of the 50-day moving average for quite a while, because once we got above it here in early May, we stayed on it for quite the stretch. I thought that was, very close to testing. The futures market tested the 50-day here on October 10th. SPX, XSP, SPY, QQQs did not. They've all officially hit now. So we hit the 50-day. Now, yesterday's candle, we slightly closed below it. How the market responds today will be pretty telling. It's going to be an important day for price action. It's been holding that support for a while. If it gives, then we are officially entering into indecision territory. Okay, so between the 50 period and the 200 period, that is a caution zone. Okay, so if we end up going back up above, then bulls resume. Let's see if that takes place. If we are pressing lower, challenging this October 10th candle, we still have some moving averages in here. Waterfall income, we've taken all this into consideration with some of our strategy twos. If we like strategy one, getting deployed on strategy ones, maybe in the pullback zones with the, this is a 100 period. This is a 144, and this is a 200. I'm not necessarily want to take trades at all of those levels, but probably two of them. If I did like the 100, which would be more shallow, 144, 200, I kind of lumped together as it's a pretty good trade for a dynamic support level. Okay, so we're officially in a stay out zone, and that's fine. But today's price and NVIDIA earnings tomorrow after market, what does that ultimately do? Do we stick around this 50? Is it just getting, more sideways? Is it testing the same level from Friday last week? Does it just have a hard time closing lower? We'll find out. But if you see that vol suppression is not happening and, algos are getting, they're getting either triggered for buy orders or they're going to be starting to add more put exposure. We'll see. Puts now are getting relatively expensive. So this is why Crash Insurance Masterclass, we've already been doing that. We'll see. Your guess is as good as mine how ugly this gets. We all know the corrections seem like the end of the world until price proves otherwise. But I'll keep going back to the couple of key levels. This 50 period is pretty key. It is important. The October 10th candle is important. We take out those levels, we're in a big fat indecision zone. From that point, I would say wait for a trend line or wait for some convincing, candle that pops back up. Okay, it's not this first portion. It's not this first portion that's going to feel the pain, right? If this market is here and here and here and here and here, that's not the pain. What the pain is when we start to go back up and then we see the bigger flush. That's when everyone is getting crushed. So it could be like an orderly correction for 5 to 10%. I'll just bring up a brand new chart since I don't have just I know, like, I can see the price action through it's surprising I can see just nothing but candlesticks here, even though I have, obviously lines and boxes and all sorts of crap on my charts. I can just see the price action, but I'm going to open up a new workspace here. Need clean. All right, so let's do this. Take the entire move from April's low. So I want to put some things on the radar here. Take the low, take the high. All right. One of the biggest levels that I see price coming back to is here. It's a perfect alignment between previous all-time highs and the 38% fib. Now, that's not going to be fun to see prices coming back between 6,200 and 6,000, right? Because all of the structure would be breaking. All of the structure would be breaking. Okay. Now, I'm not saying that is the perfect trend line, but if you start with the low, connect the dots, connect the dots, connect the dots, connect the dots, this level held pretty nicely. So either this trend line becomes the new resistance and we kind of hug it again and we stabilize here off these two lows, or we break and go lower and we're talking a 23% fib, a 30% retracement level. Again, just note the numbers: 6433, 6300, 6139, so let's say 6140. And I mean, if we pull back into this area, we are essentially going to be flat for the year. This is where the year trading started. Okay. Would that be a disappointing 2025? Yeah, it would be. I mean, what's kind of crazy about 2025 is this might be going down in history as one of the most hated bull markets ever. Just because of how it started. It's like we started with a crash, went into a melt-up rally, ignored everything geopolitically, climbed the wall of worry, had terrible sentiment, and we're still up, 14%. Now, year to date, up 13. Does it give some of that back? Well, percentages wise, if we were to fall and give back about 11 to 12% of that, that'd be a pretty disappointing year, right? So the year isn't done. And are we going to be saved by NVIDIA? I don't know. Maybe, but I don't like how NVIDIA's price action also is sitting near like weekly lows as we're going into earnings. So either this is enough of a like de-risking, deleveraging in NVIDIA to allow this to pop. But I think on earnings, I wouldn't be surprised if earnings beats. I think it's going to be price action. Do we, I mean, if we have a gap in NVIDIA, if we gap up and this thing fills right away, then there's clearly some sell pressure in the entire market. Okay. There could be a, holiday. I mean, you can use an exaggerating word like a holiday massacre. We've had some nasty sell-offs through the holidays before. It's not like it's never going to happen, but it would not be fun. That's what I would say. If we roll into like this November, December, and it's all weakness, it's going to be a pretty rough kind of holiday stretch to finish the year on a terrible note. That being said, look, daily profit play is daily profit play for a reason. Like, none of that really matters. But as far as overall positioning, I'm having to be pretty patient. I mean, the VIX is at 23. Does it go from 23 to 30? Do we have a bigger spike? Or are we talking another volatility event where we go from 20 to 40, 20 to 50? So I may use this elevated VIX for Project Options Edge and continue to sell some premium on SPY and Qs, put it all the way back down to April lows, which is, I think, a pretty high probability trade. So we'll go from there. Okay. How's everybody doing? How's everybody feeling? Are we okay? I think it's important. Like, you're starting to sense like people are feeling some pain. It's a different vibe out there in the markets. To see that for the last couple of weeks, this market is struggling. Now that we've closed below the 50-period moving averages literally everywhere. Twitter's not even, so there's something up with the internet for a lot of places. There's outages, like Twitter's not revealing posts, and I'm sure there's web services out somewhere. But it's been pretty noted here. Like for the first time in 130 bars or whatever, like one of the longest stretches in history, we had the 50-period moving average that finally closed below it. Okay. So point is, day to day, we're going to be fine. Whatever happens today, we'll figure it out. Keep an eye on the VIX. I've got things recentered with daily profit play. Let me bring up my. So pinch points. We got VIX at 23.79. Let's do the numbers right now. This might go higher, so keep an eye on that. But let's go 23.81. So we're looking at like a 1.48, let's just say 1.49 and 1.48, 1.49 with a gap. So we're looking at a gap of maybe 0.5% lower. This is a rough estimate here. We'll do it exactly when the market opens, but we will go roughly from the close about 0.49 to 0.50 lower. So there. So roughly 66.39 at the open. And you take that plus the 148 VIX measurement. Okay, now that gets us outside because of the gap lower. That would get us outside the VIX box because that's centered here on the close yesterday. I'm looking at a rough 65.45 or 65.40, 65.45, 65.40 potential low, and that's VIX at 23.8 plus gap, right? So that's a pretty decent measurement. Now, if I was going to play defense, that's where I'd be putting my defensive trades. Broken wing butterflies. You can also consider like the very inexpensive iron flies or butterfly traps. This is why I'm having a masterclass today. Daily profit play masterclass today at, let's see here. Verifying the calendar. Give me 1 second. There it is. Okay. So daily profit masterclass today at noon. So high noon Eastern time. We'll have a little power lunch. Let's get after it. It's going to be a lot of fun. I think this is going to be this should be like one of the fastest ways to get anybody in daily profit play up to speed with core strategy plus defense. We've never talked about it that way before. My job has been teach the core strategy, have some alternatives of just getting people more familiar with a couple of daily opportunities, because we can be pretty flexible in a zero DT environment. But today at 12 noon, I want to continue to unpack like how awesome this indicator is. This is the daily profit indicator with ATR levels and a volatility measured box, which gives us our ability to, with I'd say high probability, call our tops and bottoms for the day. Okay. Bottoms can be slippery and difficult because if you have a gap and you have the VIX that is going up through the day, the lows can get lower. Type in a wire yes, so that makes sense. If the VIX is going up through the day, that the gaps, or I'm just the VIX box itself can extend. Does that make sense? So it can be difficult to call the bottom. But obviously, if the VIX is not going up, the VIX is retreating, and the market's still selling off. I mean, you've got a pretty good calculation here. I mean, we're using 23.8. If we see the VIX today goes up, it's going to be tough to call the bottom. Keep calculating out, right? Keep calculating out a potential bottom. So we'll check it today at 10. We'll check it at 10:30. We'll check it at 11. This is, I'm okay like calling the bottom for the day, but I obviously have to modify my levels if I think the VIX is running from like 24, 25, 26. Well, my bottom calculating at 23.8 VIX is not going to be enough to potentially contain that low if we're, another 10% higher, right? So that's just my thoughts. But I think it's going to be a lot of fun to say like, oh my gosh, that's really nice to have like the core strategy that works most of the time and also have a defense trade in that helps us manage risk through the day. And I've literally spent months like begging students to understand how important risk is in a 0 day environment. And now I think it's pretty much the best way for me to showcase this course. Because if we can manage risk, winning the day is pretty easy, right? If you manage risk through the week, winning days are what we expect to have, right? So let's say the market doesn't cooperate. Market makers fail to contain prices within their market maker moves. Usually that would be an unpleasant day. It's like, oh crap, we lost 1 out of 10 times for daily profit rate, but my losses are $400 versus making $50 to $100. It hurts, it stings, it's backwards reward to risk. But when you have defense in here, like yesterday, I lost $50, won $100, I made money on the day. Great. Last week on Thursday, Friday, I made like $400 on Thursday and Friday playing defense. Thursday, I lost the daily profit play, still made money. Friday, I won the daily profit play and lost my defense trade, still made money. Right. So it's kind of nice to have that backup plan. All right. See if the VIX goes to 24, 1.5. Yeah, correct. Just keep an eye on the VIX. So if the VIX goes up to 25, go 25 divided by 16. VIX goes to 30. We're going to be in for some pain. Well, we'll see. Not yet. Let me do it. Top level. So to be conservative, if we are gapping lower, okay, we can take. I'm going to do the top level conservatively by using the close yesterday, because if we're gapping lower, it should not be able to get to that top level. But I'm going to take the close and go up about 1.48, 1.49. That is about 67.70. 67.70, 67.75. Potential top. Again, that's VIX at 23.80. And previous close. Okay. So this should be extra conservative for the top and the bottom, because the bottom, I'm taking the gap plus my VIX measurement, and the top, I'm taking the close plus, right? So it's like markets have to have a little bit more space and a little bit wider. The bottom, like I said, is a little bit difficult to call today because if the VIX goes up, this bottom is going to shift a little bit lower. This should be the October 10th low over here. Okay. This is corrective symmetry, 65.15. I'm going to move this over here. All right. So I'm going to change this line to our October 10th low. That way I can keep that as a reference on the chart. So that low's around 65.50. Okay. Which, if we get to that as a low today, I mean, let's see if the market actually responds to it in some way, shape, or form. All right. That makes sense. So we got a game plan today. I'm still going to look, plus or minus on the day. Let's go to the broker platform. Give me 1 second here. Okay. So we'll go plus minus on the day, SPX. For the 18th, we got a plus or minus, 56, almost 57 points. Even market makers taking a big wide swing today. News-wise, we still don't have a ton on the calendar, but just we have an elevated VIX. There's some uncertainty. We closed below the 50-day moving average for the first time in 130 bars or so. So that's a lot. A lot of volatility, a lot of intraday swings. Just keep an eye on this one. I mean, coming into the day, plus or minus 56. Well, that means from the open, okay, open plus we have ADR. ADR is around 71. So from the opening price, whether we go down or up, as long as price stays within 56 points, market makers did their job. I mean, and typically they are pretty darn good at their job, even in a high volatility environment, because this is the stuff that they do. Like oftentimes the volatility can be kind of overstated. I mean, this is where it comes back to the good old formula, which is if the expected if the expected move is greater than the actual, this is where market makers do great. This is where we do great. If the expected, which is around plus minus 56, and the actual from opening bell to closing bell is, let's say it's, 50 or less. Well, that is going to be pretty much the 25 to 30 delta move. So if we're selling a 10 delta or a 15 delta, we should be out of the way and we should be fine. Okay. That is just the distribution curve. Here's your one standard deviation, and then here's your two and your three. Can we have a two and a three standard? Of course we can. Okay. We can always have a huge move, but it's very, very rare that that happens. Okay. What's crazy is like a two standard deviation move incorporates about 93% of an entire distribution of the asset, like the index, like the S&P. 93%. That is still 7% that's like, holy crap, I can't believe the market did that. A three standard deviation move covers 96%. That leaves 4% of holy crap, I can't believe the market did that. So to put it in perspective, and this is outlier stuff, a 2 to 3 standard deviation move is an outlier. But Black Monday, 1987, the 1987 crash was a 20 standard deviation move. Will that ever happen again? I don't know. There were market makers at that time, so it happened. But I mean, again, risk management. Okay. So we'll see if they do the job. Any pressing news today? I mean, the big catalyst, we have NVIDIA earnings. I thought we were supposed to have some type of news releases. Let's go this week, high impact. This week. What? How about you go to this week? All right. So what's this morning? Anything? Low impact everything. Fed speakers 10:30, 11 o'clock. Okay, let's watch the Fed watch tool. Are they changing everything? Is it still a higher probability of a pause right now in the 50s? It's kind of been a split. All right, so it's going back to a rate cut now. This is what I said. It's going to be back and forth. It's going to be right up into crunch time until it's December 10th. If the market's tipping over a little bit, Fed cuts, okay, fine. I mean, typically cutting cycles aren't great, to be honest. I mean, every time you look at the Fed's cutting rates, they tend to see that like the recession follows shortly after, and cutting in the labor market. I don't know. We'll see. But this will be more drama for the next couple weeks. All right, what else do we have for news? So Fed speakers today. What about tomorrow? Tomorrow, all low impact. Trade balance, Fed. So Steve Moran, he's one of the more dovish Fed speak guys. More Fed, it's all Fed speak. Jeez, Pete's. Minutes on Wednesday at 2 p.m. That'll be interesting. High impact on the calendar. Okay. Thursday. So we're getting a Thursday non-farm. That's new. I knew we had some data coming out this week. So there you go. They're sprinkling in a non-farm on Thursday, the 20th. Why? Because they can, I guess. Forecasted for 58K. I mean, it'd be nice to see the market not have a huge disappointment for non-farm data. Unemployment rate forecasted to stay the same at 4.3. Average earnings, we'll see. So, all right, got some news on Wednesday, FOMC minutes. Thursday, a non-farm payroll. I don't think I've ever said that in 20 years, but that's what happens with a 40-plus day government shutdown. So unemployment claims on Thursday as well, like all the stuff is coming Thursday. So we have unemployment news Thursday and non-farm. And then Friday, PMI numbers at 9:45. All right, so we got some U.S. data. Masterclass today at 12 noon. Yep. How much do you rely on gamma levels? I mean, a lot. It's still reliable. Okay, so I mean, to me, it's going to be real time. Here's going to be real time levels. I mean, they're still sticky, but what I would be doing on gamma levels would be, um, look, the market with this type of volatility at 23 VIX, 24 VIX, the levels are a little bit less sticky and more like targets. Okay. So, here we are opening lower. All this stuff is going to change. Let me move this around. Let's go to my daily profit play 5 minute, and then my little samurai guy. Okay. So we'll get rid of that chart. We're gapping lower. So 6,600, we're negative gamma, 6,600, biggest gamma level to the downside. We're opening up around 35 or so. Okay, just let this soak in for a second. If we're going low deltas, should be okay. Keep an eye on things. We have our VIX box here. VIX is at 23.8. We'll keep an eye on that for the morning. Let's have a look at some price action today. So right now, I'm going to look at I'll let this settle down. This expected move. I mean, I'm obviously not going to take with a plus minus 49.50 on the day. We saw 55 pre-market. So I just want to see where the deltas settle. Like this expected move should be like a 25 delta, not a freaking 7 delta. So this needs to just change slightly. So put side. So my 10 delta's out of the way. My call side. I mean, this is silly. Like, why is my 10 delta in the expected move? Unless there's that much skew in the market right now. My put delta, sure. 10 put delta, 65.50. That is below 100% ATR for the day. We're looking at a potential bottom around 45 or 40. So there we go. Now I got the shift. Okay. So I could go a little bit probably higher on the call side. Maybe I can get this to be like, and I don't want to get stupid here, but if I went like 12 delta on the call side, so 12 delta call side, and I might consider like a 14 delta just in case we're in like pretty negative gamma environment, and then go 10 delta put side, 50 and 45. I mean, this isn't a bad trade. We're getting a $1.15, $1.10 for it right now. I'm going 10 deltas. Let me see if I can get if I can get over a dollar, I'll take the trade. So dollar, 10, $1.05. All right, so I'm in for $1.05. Trades coming in. 11:18 expiration. $65.50 on the put side. So $1.05 credit filled. Okay, so now my calls have shifted to a 9 delta. Again, probability of out of the money is pretty high, but expect a lot of volatility today. Like this is one of those days where you got to just accept the low deltas, trust the process and probabilities, and see what the market gives us for the day. Okay, so we will see. Anything on the defense side today? Sure. If I'm looking defense, VIX at 23, we went from 23.8 down to 23.4. I still just want to be mindful of like, let's take the open or let's take the gap. Let's get the conservative side. So we go from yesterday's close up about 1.49. So I'm going to do a 70-75 broken wing or a 65-70 broken wing. I think, it's, if we're trying to call the top, let's be as safe as possible. So I'm going to do a broken wing at 70 by 75. So 70 by 75, skip a strike. And this, if it gets filled for $1, love that trade for $1 if we can get it. Pending order. And then the bottom, but the bottom is a maybe. Bottom's a maybe. So I can throw it out there. Problem is I'm not going to be here for closing bell today. So I feel more comfortable calling the top than I do the bottom. If the VIX is going to go up today, I don't really want to call the bottom. So I'm gonna avoid calling the bottom today, but I will call the top. So I'm putting in a broken wing. I'll put this in Zoom. This is technically like a bonus trade. So top defense trade pending SPX doing the 6770, 6775, and then skip strike to $85 credit pending. All right. So that's defense on the day to the upside. Okay, so daily profit play is here. 1, 2, 3, 4. Okay, I do want to take a quick look. I'm going to go SPY 662. VIX at 23.7. Let me see what I can get for a VIX or maybe Qs. I haven't done a Qs. I might do like a big fat ratio spread on the Qs. I mean, that would be a terrible crash, but 36% from all-time highs. I don't think that's going to happen by the end of the year, but I'm curious what I can get for it. So let's go Qs, lows at 400. Let's go trade Qs. Either December 31st, January 2nd, not a bad spot, right at the new year when things are a little bit lighter. Curious what the strikes are. 400. Fudge. I don't have strikes down there. That's a bummer. So I can go December 31st. All right, there we go. And yeah, these puts are low, low, low. Buy, sell, sell. Fudge. Let's go a little bit farther. January 16th or 30th. Let's see what this looks like. 410, 400, 390. Not great. January 30th. What? Lowest strike is a 395. You freaking kidding me? 420, 405, 395, 85 cents. Yuck. I can't even get a $100 trade. Huh. Well, I'm not going to take the trade at that. If this was offering like $1.50 to $2, I'd take the trade. But these strikes are pretty bad. Like I don't get any strikes on January 30th below 395. Deltas are crazy low, but I still just if I'm going to own, the SPY or the Qs, I might as well look at the April lows. So anyway, I'm not gonna take the trade. I took a nice trade yesterday. This is a new account that joined. So I put in a trade on SPY yesterday. I did a 510 by 480. So I put in a $3,000 profit trap, or I should say a $30 profit trap, because potentially that paid me $6,000 if I got the profit trap. But my naked put would be at 480, and I'm willing to take the shares at 480 minus the $30 minus the $3.38. I'd own shares at like a 34% discount if I was assigned. Probability of assignment is like 2%, 3%. Probability of profits, 98%. So anyway, that was a pretty good trade for income. And we'll go from there. So anyway, back to it. See how the day unfolds. So we are right on the cliff. Are we falling below these levels? Here's kind of the simple look. John, it's in there, man. It's in Telegram for daily profit members. I put the bonus trade in for everyone. If you want to look at the top of Broke Wing Butterfly, I'm not going to take the 111 trade because it doesn't pay enough. So here we are flirting with, this was a retest of the 50 and it bounced, a retest of the 50 and it bounced. And here it is retesting again, but we closed below it. So got to pay attention to that. Next level is the October 10th candle. If we're below these levels, you have a 100, 144, and a 200 moving average. Okay. This is a indecision zone, by the way. Okay. I say indecision because yes, I do think that the market would find a way to rally off these levels. What are you talking about? It's in Telegram. If you're a daily profit member, it's in Telegram. I literally post this as soon as I take the trade. 118 people have seen it. If you're in the Telegram channel for daily profit alerts. Yeah, I didn't take the trade. It's a crappy trade. It's not offering the credit that I want. If I would be happy with, it's 95 cents. It's an easy $100. It should be an easy $100, but that's a lot of risk. So anyway, let me look at it again. So maybe I can, lighten up on the bonus trap, but what I don't really want to do is go out to like February or March or April. I mean, I guess it's not a terrible thing, but like if we're about to go into like this, this tailspin spiral, death spiral to the downside, it's like 20 to 30% is now like a normal correction. I mean, we've had a 10 of them since 2013. So for me to be like, yeah, 30% lower, that's going to be the bottom. No, it's not. It's a good place to get assigned and work through a position. But if we have a, if we have an everything bubble, this market's not going to stop at a 20% correction. An everything bubble, we're talking probably 50+% declines. So again, if it was offering me $2 to $3 to $5, it'd be worth taking the income trade because I think the probability is still very high. But for 90 cents, no thanks. Okay, when I put it in, it says 05. Well, Rob, you're talking about maybe that top defense trade. Yeah, the ones to put it in for a penny order at $1. The trade I looked at on the Qs was going out to, let's go January 30th, which I think the strikes were pretty bogus. Strikes I get down to 395. Okay, so if I use that as my, I mean, I could do a profit trap here of $1,000. I can go 410 and a 400 and a 395. Like even that is assignment at 395 with a $10 profit trap. So here's how that math would work. If the trade offered me $1, and honestly, like $1 is okay. It's okay. But if we get assigned at 395 minus a profit trap of $10 minus $1, I'd own shares at 384. Now, the good thing on that trade would be I own shares of the Qs at 384. Okay. And that's if you want to own the shares. I don't mind owning the shares, especially at a massive discount. It's probably like straightforward $100 if I can make it. But getting assigned at 384, let's talk about that type of discount. Probability profit is pretty high. We'd be coming from all-time highs. 384 would be my assignment and my break even. I would own the Qs at a 40% discount. That should be a really good trade, right? Like meaning I don't think I'm going to get assigned. But I don't know, man. Like right now, here's my thoughts. The VIX is at 23. If the VIX spikes to 30 or 40, this trade pays a lot more premium. And I could take the exact same trade and probably get double or triple the credit. Okay. Because if I take this trade, I have, all of the naked put exposure below 395. But the nice thing is, even with this trade, like the delta is not crazy high. And if I just did a naked put, okay, a naked put, I have a 2.2 delta versus I craft this trade with a 111. Now I have a 1.86 delta. I mean, I shaved the delta down a little bit. That gives me a profit trap. I mean, $1 is okay, but it's a light income trade. I wish the Qs offer a little bit more premium. Um, let's see. That's a 410 by 400. I do like the strikes. It's still a 99. Even with the VIX at 23, 24, it's a good high probability trade, even with the Ivy rank at 44. So here's the deal. How to manage this trade. Has anybody taken a trade like this before? How many of you, if you took this trade with me, would be willing to own the Qs? Type in own in the chat if you're willing to own the Qs, because there's an easy way to manage that one. If you're not willing to own the shares, there's a way to manage that as well. So put own or don't own in the chat, and I'll address both of them, but I just want to see where the kind of the consensus is. Okay. Rick, what's the issue? What's the issue with your trade on the SPX? I pulled in $1.05 on an iron condor. What's the problem? My trade's incorrectly. It is in the broker correctly. 10 by 15, 50 by 45. That is correct for $1.05. Yeah, look, it printed in the activity page wrong. This is incorrect. Okay, this is the trade. So I have my 50 by 45, which is correct, my 10 by 15, which is correct. So the broker display is correct. The activity for some reason is incorrect. Okay. All right, let me catch up here. So we've got no way, own, don't own. Okay, so we'll say it's split. I've got a lot of don't owns. It's fine. So I don't mind owning the Qs. Anytime that I have like 100 shares of the Qs or 100 shares of SPY, totally fine. It's usually a repair for me for a couple $1,000. I don't like to own it long term unless it's just a ridiculous discount. Like this year, I own the SPY and the Qs near the April lows. I did that based on the market breadth when it was like, we're at like the market breadth was 11, meaning like only 11% of stocks were above the 50-day moving average. It was like a great timing mechanism. Looking back like 30 years on market breadth, it was like, I'm going to take a chunk. And for most of my accounts, I bought 100 shares and I rode that thing all the way back up to all-time highs. So from, I'm trying to think of SPY was down to like 480. I bought the SPY at 486. I rode it back up to the previous highs, which were like 613, 615. And then I took profit. That was a pretty good trade. Qs, same thing. I bought the Qs around like 410, lows around 400. Rode it up to, the all-time highs. It was a timing mechanism with market breadth. Now what I'm saying is this trade on the Qs, okay, if I went out to January 30th, I don't love that I have less strikes to play with. So going out to, what the heck was that? Oh, I did a broken wing butterfly in Microsoft. Okay. December. All right. So January 30th. So 410 by 400 by 395. I'm going to take this trade for, let's see if I can get $1.05. A dollar is what I want to get filled at. So I'm going to try to take this for $1. So $1.05 not filling. Let's go mid price at $1.02, maybe $1.03. If it's not filling at $1, I'm not going to take the trade. $1. Okay, final offer at $1. If it's not filling, then I won't take the trade. You sneaky dog. It's not filling at $1, so never mind. Does that mean I want to leave it pending at $1? Not really. I'll just reassess the trade. So never mind the Qs, but I will finish the discussion. So if I did this trade, let me build this trade out for you. So if you want to own the SPY or the Qs, it would be the 410 by 400 is a deep, or I should say far out of the money debit spread. The 410 buy put, 400 sell put is a $1,000 profit trap. Okay, that's what it is. So if price is below 400, I get $1,000 profit. If you just isolate that trade, if I just delete this leg, if I just did this trade costs 15 cents to make $10, but it's a very low probability trade. So what I do is I add the naked put for 395, and that's really what I'm managing. It just gives me a little bit of a profit trap and a buffer in front of it and lowers my overall delta exposure. So here's how I would manage the trade. If it would fill for $1, and I might leave this thing in there, but the bid price is 95 cents, which is probably not why it's not filling, because it's kind of treating this like a naked put. Let me see if I can fill for $1. Okay, I got filled for $1. All right. I'm going to spread this out across my margin accounts. So I'm taking the trade. I'll post it. This will be a bonus trade if you want it. I'll talk about how to manage the ownership side as well as the no ownership side. Okay. Let's go. All right. It's getting filled on a couple more accounts. All right. So I got filled for $1 to $1. So bonus trade. This is going to be officially for my Project Options Edge. QQQ. I went out to the 30th. Buy the 410 put, sell the 400 put, and sell the 395 put. $1 credit filled. Okay. So this will officially go for Project Options Edge. I'll just type this in. New trade for income. New trade, QQQ, 1/30/26 expiration. Buy the 410 put, sell the 400 put, and buy the sell the 395 put. So the 395 is essentially my naked put. I got filled for $1 credit. 99.5% probability of profit. About a 2% chance of assignment. I'm okay owning the shares of QQQ if price is less than 395 by expiration, which is highly unlikely, but still want to make sure that we know what we're doing. Okay. If assigned, my break even price is 395 minus 10 minus $1. Okay. So 395 would be the assignment minus the profit trap minus the $1 credit. I own shares at 384. 384, which is approximately like a 40% correction from the all-time highs. So all-time highs here, if we fall to 384, about a 30, let's say 39 to 40% correction. Roughly a 39 to 40% correction from all-time highs. Okay. If you don't want assignment, manage the 395 put for a stop loss. So it filled. That trade filled for about $1. We'll say $1.18. Okay. Filled for $1.15 to $1.20 credit. Consider if you go, let's just say $1.20 plus $1.20. That'd be a 200% stop loss plus another $1.20. So 360 stop loss would be what? 100 to that's a 200%. So either 360 or 480. Consider a 360 or 480 debit stop loss. And that does make the trade really reasonable. Like if you were to say, look, I got in the trade for $1.15 or $1.20, I stop out at 480, I would only take a $300 loss on this trade, give or take. You lose $300 and you actually have a free hedge that potentially pays you $1,000 to cover the loss, right? So if this turns really nasty, you stop out the premium side, you stop out the naked put for like a $360 loser, you have a potential $1,000 profit trap that may pay us, even though it's a super low probability, but who knows? You know, so you'd only be out like an extra 10 or 15 cents in that on that debit spread. So probability to profit is really high. More than likely, this is just going to be an income trade of $100. That's most likely what the trade's going to be. If you put in the trade down to the way that I put it in, so buy the put at 410, sell the put at 400. What the hell was that? I think we just got filled for an SPX trade for $1. Let me check something here. Go in here for tracker. So QQQ, crap. And this is the tracker. Gosh darn it. $30 expiration. Buy the 410. Sell the 400. Sell the 395. $1 credit. All right. Looks like I just got filled. So 5820, 5810, 5875. That is a waterfall income pending order. We double check that one. So 5820. Check my Jan 16. Starting at 5820. Was that the trade we put in for Monday? Pending order or Friday's, maybe Friday's class last week. I'm verifying this. Those were profitable. Just checking the tracker right now. IWM's profitable. Huh. All right. So this one just got filled. So waterfall strategy 2. I'll make this official. If you want to take the trade, you can. 11/18 is the date. Today's trade went out to the 16th of January. 5820. 5810. 5800. And 5775. So that is $1 credit. The risk on that trade, so 25.15, so it'd be a $14 risk. VIX at 25. Yep, that's what I'm saying. Don't call the bottom. Don't call the bottom. Okay, for an intraday trade, don't call the bottom. Things get a little crazy. It might be tempting to like throw a profit. It's like I have no idea what price is going to do today. Are we going to fall straight the entire day? Maybe. I mean, we're already at a 50+% ATR. We didn't really gap that much lower. Intraday pricing is pushing to the downside. That is potentially where that like bear pressure comes in now that we're below the 50-day, right? VIX has jumped up and it's still jumping. With no volatility suppression, this is where the VIX gets really scary. VIX runs from 20 to 30, right? If that's the case, it's like this is where things get a little nuts. This is where we have to be careful on what type of risk we're deploying. That's why I literally went out to the April lows. I'm not going out that far. I'm like, are we going to dump 30% in the next 60 days? Probably not. So that's how safe I'm trying to play like my premium selling. But for today's daily profit play, if market makers do their job, remember they still had like a 45 or 50 point, plus or minus 45 or 50 on the day. Pre-market was like 55 or 56. When we opened, it was 50. So we've opened up right around 41, which means we could pull back to 65.90 or so. And that's still within market makers move. We could have this initial drop from 52 where, the market already dropped 50 points, right? But if we drop 50, stabilize, daily profit play is fine. We're down to our 65.50 zone. We'd have to drop below, and again, anything's possible today. But if we drop below 50, okay, if we drop below 50, that is a move that has to go all the way through the 50, all the way through the 100% ATR, and basically about 140 to 150% ATR today. Not saying that it can't happen, but hopefully it will not. Hopefully market makers don't just let price just dump and from the open at 41 and be down 100 points when the plus minus is 50 points. So let's see if there's any fighting them to defend. If it's one of those days that they take all the risk and they roll it, like this might be just a terrible down day. If you want to play defense, here is the deal. I won't be here at closing bell, so this trade to me is a little bit sketchy. But if I wanted to play defense and I looked at something like 6,500, try to throw like a big fat net out there that's really cheap. Do we drop to 6,500? The low from October 10th is 6,550. So if we hit that, I'm hoping that actually matters and we see some price actually care. But let me see something. So keep an eye on this morning. Hey, and look, I will say this. If anybody is watching this type of price action, you're like, oh my God, the VIX is 25, everything's falling. If this makes you emotional, then don't trade today. Seriously. Like if any of this is like, don't put, picking up nickels in front of a steamroller, don't trade today. And you come back and do it again tomorrow, right? Like it's okay. So you're not going to hurt my feelings if you don't take trades. Like I might lose today, but I've got to be comfortable with that. What I was going to look at is maybe putting in a defense trade where if this thing just continues to bust to the downside, maybe I throw this like really cheap 6,500 like iron fly, see how I go like maybe 30 or 40 wide and pull in a bunch of credit. It's probably going to still cost me a few bucks, so that's why I'm tentative to do it. But let's actually look at it. So, here's where my put side is threatened, right? So 65.50, 65.45, my put side is threatened. If I went to, let's say, the 10, if I sell the 10s and I could do maybe the 45, that'd be 35. Well, let's go 30 wide. Let's see what 30 looks like. So if I go 30 wide, take this down to 85. So 15 to 85, 15 to 45, I'd be risking $275 today to potentially make $2,700. If we're going to have just a terrible bearish day, there's a lot of profit potential there for a low risk. Okay. Now, what this doesn't do is really help me mitigate any risk on daily profit play. Because if I win daily profit play, I win $100 and I'd still lose $275 in this trade. So that's probably dumb, right? If I went 20 to 45 and 20 to 90, now I go 25 wide, I'm risking, shit, that was a big difference. Now I'm risking $530, is that right? So 20 to 90 is 30 wide. Oh, there we go. So 320. Let me go 40. and there. So it's 20 wide. I risk 170. Move this up to 25. So now it'd be 15 wide and 15 wide. Now it's right around, like, it'd be a wash on the day, which is, it's not my intention, is I don't want to just wash away my daily profit because I still think it's a good trade at a low delta. Okay. But if I had some defense, at least I've got a big fat profit trap in here to make some money. So if I went maybe here to 30, 10 wide, 10 wide, now it costs me, $50 risk to potentially make $945. The problem with for me is I'm not going to be your closing bell to manage this stuff. So I either, take profit on this thing quickly during the day and hope for the best of daily profit play, or I'm really just going to kind of hope that things settle. But it's like that's not how I trade. It's probably better for me just to take the daily profit play and just kind of hang out and manage what I can and control what I can, because I'm going to be gone for the final couple hours of trading today. So, I mean, personally, I'd rather go a little bit wider. Like this one is a 15 wide. If I can get this trade for, 14.10 or 14.20, that's a maybe. We'll see what price does. So I'm just going to sit tight for right now. Okay. So let's put our lines in the sand 25, 20. I mean, VIX is coming a little bit unhinged. If anybody took the VIX trade with me, by the way, VIX trade for Crash Insurance Masterclass, we did a synthetic on VIX. This thing's up, $120 right now. Who knows? Like this trade here, analysis. I mean, it's unlimited profit. If we see some stupid screamy VIX to 35 or 40, we've got thousands of dollars of profit on the table. So yeah, look, this isn't fun. Like if the VIX is up to 40, nothing's fun. But it's nice to have a hedge in. Like it offsets a little bit of nonsense. But still, keep an eye on this. What typically happens with the VIX above 20 like this is now that we had a test of 22 and failed, tested 22 and failed, but now we're back in elevated, we're making fresh highs in the VIX. Unless this is spiking and then retreating, naturally the VIX is typically like an aggressively reverting instrument. But what gets scary is the VIX going from 23 to 30, then it retreats, or 20 plus to 40, and then it retreats. It's that like VIX pop that can really do a lot of crazy damage. Okay. So let's just take in stride. If somehow the VIX settles into like 23 today or 22 today, that'd actually be a pretty good sign the market might put in an intraday low. Looking at price action right now, opened up around 41. We dropped all the way down to 83. There's about a 60-point move to the downside. So we dropped 60 points, which is right around that plus or minus 55, 56 we talked about this morning. So market makers are clearly doing something to respond to this. We're at our, one of our lower gamma levels around 6,600. So I say we just kind of hang out for the day. Okay. So my levels, there's the October 10th low, and that is at 57. We put in a put side at 50. Right. So I have a put side at 50. And then my call side, I did a slightly higher delta. Put side, call side, 67.10. 67.10 would be up here. So 65.50 and 67.10. So if price comes into this area at all today and just kind of hangs out, you're looking at get daily profit play profits. Pretty straightforward. But if it's going to keep the pressure on, pressure on, pressure on, pressure on to the downside, there might be that Hail Mary at the end of the day where the markets still don't like close below a 10 delta. That's very possible. It would be nice to see like this aggressive like 60-point move comes back and recenters, and maybe the day is just chop. Like the market's still going to print red for the day. We're down, we gapped lower, but we don't necessarily do a ton of damage. And like I said, with that October 10th candle, if there is some support levels to buy there, I think daily profit play still has a good chance to survive. So my goal today for daily profit play without adding another defense trade is if we can get 70 cents debit, 60 cents debit or better, I think that's a great profit on the day and be happy. And it's like, even for a wild and crazy volatility day, we made money. Okay. Nvidia earnings catalyst should markets hold markets. I mean, I don't know about that. Okay. I mean, Mags is rotating pretty hard. That's the thing is I think inevitably the market has to rotate away from Mag 7. This concentration is ridiculous. It's the same thing that happened back in February this year that started the rollover started here with the Mag 7 rotation. So I think that really Nvidia earnings comes in, it might stabilize the market because I'm pretty sure they're going to beat. But the issue is unless Nvidia is just like crushing this thing and we have all-time highs again to stabilize the entire market where it's like, oh, this AI trade is legit. This AI trade's here to stay. And the market gets all of a sudden uber optimistic again. But just if Nvidia does something like this, where it's down on the day, we have earnings tomorrow after market. I mean, look, if we're talking Nvidia down here going into tomorrow's trading, I don't care what earnings give. Earnings could pop up to the upside. All this is to me, this is structure that's already in, damage that's done. This is I think it's a sell the rally on Nvidia. So if we were sitting here, I'd say the rally could be saved, but we're sitting down near, multi-week lows. So if anything, what you have to watch is not just the price action on earnings, but it's post-price action, like post-earnings. So if we have a earnings pop up here, the plus or minus for earnings is about $13. So now we're trading at 180. That puts us up to about 193. 193 is not taking out all-time highs, right? So, I mean, what would be damaging would be like a drop down here to, 167. If the market makers had their expected move or they hit the expected move, or rally up to 193 or so. But if we hit 193 and then fade immediately, then like I said, I think this is a sell the rally and the mags is a rotation. And it's going to be wild, like 45 to 60 days to close out the year. Because if this is when the rotation is starting at the end of the year, that's going to, I don't know, the market's going to limp in or it's going to lose a foot, lose some limbs. It's going to be amputated as we come into the end of the year if mags is rotating hard. Would I sell covered calls? I mean, yeah. If I had a position on covered calls, I would have been selling that crap at these 200 levels, 190 levels, 185 levels. Look, you can always get back in. I mean, you can always get back in if you're selling calls. Like you could get some fat premium, but now you're coming into earnings. So if you come into earnings and you sell a covered call and it goes higher, you're not going to win either way. If you sell a covered call, you have to accept that the shares can get called away. But anybody that bought Nvidia down here at $90 or $100 and you're up 100%, like it's okay to take profit. Not every day does the market offer you a triple digit winner on an individual stock. Not every year does the market offer a 40% reflexive rally off of an index or 50% reflexive rallies off of an index. It literally did that this year. So when the market goes down 20% and rallies 40, the market goes down 25%, rallies 50. That's an index. Individual stocks went down 30, 40%, ripped up 100 plus percent. It's okay to take profit. You can always get back in, So it's a trade. If you sell covered calls, you lower your cost base. If it goes and gets called away, make sure it's for profit. But it's not a bad thing. I mean, I have shares and I'm in the money. I've been selling calls in the money at like 130, 135, 140 for the last like 4 months. Because once we got back to these highs, I was selling calls at 150. They didn't get called away, and then they blasted through. And so I was just rolling calls at like 140, 145, and I'm still in them. So anyway, I want to take a look at it right now. I actually have this for Project Options Edge for NVIDIA. We have Project Options Edge trade. It's up three. Oh shit! It was up like 360 yesterday. I still think the trade is pretty high probability. I do have a profit trap in there for $1,000. It's out to January. I don't think NVIDIA is just going to crash. I've got about a $500 winner, and it's up 305. I was up like 70+% yesterday. It's anyway. I might just have to sit on this through earnings, but so I have some shares. I have Project Options Edge ratio spread as well as this kind of modified ratio with the naked put. I mean, they should be pretty good income trades. So look, at the end of the day, there's not bad decisions when it comes to sell premium, collect income, sell premium, lower your cost basis, sell premium, get shares called away, raise cash. Like having cash and having like dry powder to deploy is very, very smart in a high VIX environment. Okay. Is this the time to buy? No, it's the time to sell premium, right? And the VIX at 25 is good. A VIX at 35 or 40 is scary, but great to sell premium. If you have the dry powder, it's great to sell premium. Okay. If I'm talking about timing the market, here's exactly how I time the market in market breadth is turning to absolute shit right now. So this is not good. Like this is not a time to buy. We're below the 50 period. This market breadth has been decreasing aggressively since literally summer. Once we got into June and we topped out here, it's like June, July, August, market breadth has started to deteriorate. It's getting worse. Okay. You want to know why I bought in April this year? This was right around the Liberation Day levels. You remember when Trump tweeted, said great time to buy? I already had my position in because of this. You go back on this chart. This is S5FI, which is a market breadth indicator of every stock in the S&P above the 50-day moving average. Okay. To me, it's been a better buying mechanism than a selling mechanism, although it does get me to protect profits. Like I sell a lot of covered calls and I take a lot of premium off the table. I don't mind getting shares called away when things are frothy at these tops. But a buying idea is if we're down here, usually within about 30 to 60 days, almost every single time this thing has tested these levels, it's been, a fantastic buying opportunity. So do I think market breadth is going to deteriorate that badly? I would hope not, right? I hope not. But if it does, it's going to be awful out there. It's going to feel terrible. But as a chance to buy, it's a good opportunity. Even if it's an allocation to say, look, I'll put in 1% of my portfolio here, 5% of my portfolio here, just allocate and look to dollar cost averaging more if it offers up bigger discounts. Okay, there's a lot more deterioration. If we're going to drop from 37% market breadth to like 11, there's a lot of pain left to the downside. So be open-minded to like this might be a surprising timing mechanism as we come into like the end of the year 2026. But at the same time, how many weeks have we been talking about this market needs some type of ventilation, some type of correction? It is stupid to think this market just keep going up and up and up and up and up. Makes everyone feel great, but it's also very frustrating as a trader that wants to position for dips and discounts and not get them. Okay. So point is, this isn't a surprise. This is stuff we've talked about for weeks. It's rolling over. All you really hope for is that it just doesn't become violent. Having an orderly correction, like having a high, low, lower, high, lower, low, fine. Having a lower high and a lower low is fine. Once this breaks, whether this is a aggressive, reversal, or this takes time to round out and we just kind of hang out consolidating and still maintaining what looks to be a bullish posture, but the market will make us uncomfortable. If it's high, low, lower, high, lower, low into here, and all of a sudden we're below the October 10th candle and we're hanging out between like the 200-day moving average and this level. So let's say prices are right in here. If we see this price action, if we're trading right in here, we're going to look at this price action. Some of us say like, that's a good buying opportunity. And others would say we're on the brink of a collapse. And the market would totally sit there and make us think that. And then we have to wait for price action to figure out where we're going to go next. Right. So I look at this as if it is orderly and not violent. So if we have high to low, lower high to lower low, maybe this level we can rally slightly, even if it's another lower high to lower low. This feels an awful lot like 2023. Okay. The correction we saw back in 2023, 2024 was just April and July, August, and that was pretty much it. And then this is 2023. This started in the summer. This was August to October. So we started to correct here in 2023. But we ultimately came out of that. Right? So you can see like it wasn't terribly violent, but it wasn't fun. Down and then pull back. Down again, then pull back. Down again. Broke the structure. You buy here. That's where all the momentum was. Right? So if we are, look, if price is under the 50 period moving average and the 50 period, so let's say that, put this in perspective. Okay. If price is less than the 50-day moving average. Okay. That is caution. If the 50-day is greater than the 144, or the 50 is greater than the 200 moving average, that is indecision. Once we see the 50 less than the 144 or the 50 less than the 200, that is bearish posture. Okay. That's literally the macro dashboard that I'm building for my income grid that hopefully will be ready. I want to have the dashboard prior to like the strategy. But anyway, I'm literally building this out where I can like color code this, and it's like we know whether we should be bullish or bearish or stay out of the market, wait for some more confirmation. This will keep us on the correct side of risk. Okay? Because if the bears take over, we don't know how ugly a correction can get. We don't. I can have all the perfect levels, I can have all the perfect structure. If this is an everything bubble, and I mean, if there's one way to ruin the Trump administration, it is take away all the gains from April. This aggressive pivot and this aggressive posture of the market's up, 15% year to date. If you wipe that away and go negative for the year, I mean, it's been one of the biggest scorecards. All-time highs. Look at what we're doing. The economy is a stock market. No, it's not. But like, I don't know. I don't know what's going on behind the scenes. There's all sorts of noise, all sorts of deflections. I still, at the end of the day, you follow money. You follow the money. Where's liquidity at? Big beautiful bill has liquidity coming in. The Fed is probably going to cut rates in December. Okay. I don't love that they're cutting rates at all-time highs, but they're not cutting rates for inflation. They're cutting rates for labor. We have non-farm this week. That'll be another data point. So anyway, 144, it's because oftentimes the 200 can go much longer. The 200, the 50, and the 200 is like the death cross, and that's super lagging. So the 144 is based on a Fibonacci number. I've used that for a long time. So it's kind of my earlier stay out or my earlier bearish posture. If we go, if the 50 crosses the 144, it's probably going to the 200. So it just helps us avoid some of that unnecessary risk. Does this make sense? So right now we are below the 50-day moving average. We should not be making crazy bullish decisions. Right? VIX is up to 25 and change, retreating a little bit. Keep an eye on the VIX today. So if I was gonna be here through closing bell, like I would be measuring out. Okay, we had a VIX at 25.7. If you want to, and I don't mind doing this for a low risk trade. Here's what I'm gonna do. I'm gonna throw in like a bonus trade. It's probably not gonna get filled. Daily profit is actually looking perfect right now because we're getting some price action to the upside to recenter this thing. But if I wanted to call the bottom, let's take the VIX around. And what I don't know is if I walk away from my desk and the VIX is up to 30, well, I'm pointlessly calling the bottom. But if we're going to retreat right now and the VIX goes down, then we obviously are finding an intraday low. So 25.7. Let's use it. Let's use 25.7 and just see what it is. 25.7. We're looking at like a 1.6% move. So take the gap lower. Take the open here and go 1.6%. Okay. Now this is if market makers and typical VIX calculations do their job. This puts us at a low potentially around like 65.30. Okay. So I will put in, and I'm comfortable with this trade. I'm going to put in a broken wing butterfly so it doesn't actually fill me unless I set the price where I want it. I'm going to take a trade down here for a 65.30 by 25 by 15. It's going to be a skip strike or like a broken wing butterfly. I'm going to ask for like $2 or $2.50 credit, which is difficult to get filled on, but my risk would be like $2.50 to $3 maximum risk for a potential like $500 profit trap. Okay. So I'm going to do 30 by 25 on the put side. Get out of here. 30. Let's go SPX. So that would be 65.30 on the put side. All right. So we'll go 30, 25, 15. Skip strike. This is trading for 35 cents right now. I'm going to ask for $2.50, which that's a very difficult trade to get filled, by the way. Okay. But this is kind of for me, it's defense. If the market's going to fall and we have a 25.7 high VIX and that's going to be the low for the day, that's a pretty good way to call that low. Where this trade isn't safe is if the VIX all of a sudden spikes again to fresh highs. If the VIX is at 26, 27, 28, that's not a safe trade. Okay. So I might put that trade in, but if the VIX makes fresh highs, either one, adjust that trade lower and move it out according to the new VIX highs, or cancel the trade and don't call the bottom today. Is everybody crystal clear on that? If the VIX keeps going up, do not call the bottom today. Okay. But if we, hit the VIX high for the day, then we probably won't even get the trade filled, but our, daily profit play will be our winner. All right. So let's see. All right. I'm going to throw it in there. I'm not leaving today until like it'd be around 2:30 p.m., 3 p.m. Eastern time. So I have most of the day to monitor the stuff. So I'm put this one in 250 credit. It's going to be unlikely to get filled. This trade would be a 250 risk for a 250 credit, and also the potential profit trap if we can get it inside of this like 5-point zone by the end of the day. I don't think it's going to happen. I think our daily profit honestly looks pretty safe for right now, especially if you're going to take partial profit on daily profit play versus sit on it all day. All right, so I'll throw the trade in for right now. All right, that trade's pending. Price action for the day, contained within the 50, 100% ATR, pulling back to center. Let's see what happens. So how are we looking on the overall setup? Daily profit play showing some profit. That's fine. If this shows like 30 to 40 bucks, I'm probably just going to take the winner and move on. I mean, our levels here, and it's still pretty early. We've been in the trade for just under an hour. But from price to stay below this level, above this level, hopefully looks pretty good. But I say this again, if the VIX makes a fresh high, and here's my test, if the VIX makes a fresh high, then I probably need to, one, cancel that butterfly, or two, move it lower. Okay. The tough part about the VIX right now is it is not difficult for the VIX to go from a 25.8 to like 29 or 30 on the day. And that's not the time you want to be calling the bottom. So the safest trade truly is don't call the bottom today. That's the safest trade. But what I'm looking for is, can we get a quick winner on daily profit play within, about 90 minutes to 2 hours or so, and we go from there. Okay. All right. While this is all happening, what's up with gold and silver? And Blake, I know that I'm like running way behind here, but there's a lot of action here to dissect today. I'll get to it. So gold, I still think gold has to pull back. Either pause and correct, or gold will at least end up hitting this 144 to 200 moving average. This is one of the longest bar counts in history that we have stretched this far away, bar count wise, and also distance. Like this distance away. So this distance away, as well as the time and bar count away. So either this is going to consolidate and accumulate for another leg higher, or this goes, nowheresville, and it just lets these moving averages catch up, and then price maybe spikes below, spikes above. To me, that's the buy side of gold again. Okay. But it's funny because like gold bulls, if anybody's been trading gold for like over a decade, you know that gold typically does a lot of nothing. And then these last 2 or 3 years have been like, holy crap, I'm so happy that I have gold. But what's funny is watching all the chasers come in here and just, grab gold at $4,000 an ounce and say, this thing's going to be the greatest trade ever. Look, you can buy it at 4,000 an ounce. It might drop to 3,400. It might drop down to 3,000. I think long-term gold is still great. But it depends. I mean, I don't know. I think it's a great trade. I think the gold and silver are must-haves in the portfolio. It's a percentage allocation, but you got to be really patient because, I mean, this bar count, this overstretched condition, I mean, the same thing will happen. If we have like, if this is not going to hit and it just blows through these highs, I don't care what it looks like, gold is going to come back down. Okay. And usually my least favorite thing, and this is what gets traders all excited, is they chase this stuff ultimately to see it crash. Okay. Lumber did it. Cocoa did it. Copper did it. Gold, we needed a pullback. We got it. Silver did it. It's like every stock that looks up is going to fall, and they don't fall in orderly fashions. If you go parabolic up, you're probably coming aggressively down with like a sharp top. So, I like accumulating gold. I've been in gold for the last 3 years. It was appropriate to take profit. I'm now looking to accumulate more, but take little nibbles and build my position back up.